Hi, let's get to the point. Your monthly market report from Siera Nevada REALTORS. I'm Sara Sharkey, co-president of Siera Nevada REALTORS. Before we take a look at September's Northern Nevada real estate market, we want to say thank you to our silver partner, Cardinal Finance, for this month's episodes. And now let's get to the numbers. The numbers presented are as of October 5th, 2023. Carson's new listings fell to 13.6% from August, with 51 properties being added to our inventory in September. Carson's closed sales were also down slightly, with 48 closings. The median price for Carson increased 8%, ending at $507,500. Total month supply of inventory sits at 2.2 months. Churchill also experienced a drop in new listings, with 20 properties entering the market. Closings were down significantly, with 14 properties being sold compared to 34 in September of 2022 and 26 in August. Median sales price in Churchill was $353,000, a slight increase from last year, but about $36,000 less than August. Month supply of inventory for Churchill is creeping up, currently sitting at 2.6 months. Douglas had 74 new listings, down 6.3% from 2022. 70 properties closed in September, ahead 6.4% from last year and down slightly from August. Median sales price for Douglas decreased 11.3% to $737,500. Month supply of inventory remained stable at 3.1 months. Before we discuss how the rest of the counties did, let's hear from our bow tie economist, Elliot Eisenberg. Hey Elliot, what will the impact of a potential recession be?
That's a great question, and the answer is very counterintuitive. Traditionally, when the Fed raised rates, the housing market weakened substantially, and then soon thereafter, the overall economy did. But now it's very different. Now the Fed's raising rates, and the housing market's already in the deep freeze. By contrast, the overall economy is doing pretty well, thank you. It's as if the economy and the housing market have decoupled, and the traditional relationship between the two is broken. This really matters, because now when the Fed starts to lower rates at some point in the not too distant future, the housing market will really pick up steam. By contrast, the overall economy will continue to weaken, because that's what happens. And we know the housing market will pick up steam because this is not going to be a terrible recession like 08-09 or 81-82. It'll be more like 1990 or 2000. Moreover, households have lots of home equity to boot. That's it for now. I look forward to seeing you next month.
Thanks, Elliot, for your insight as to the impacts we can watch for. If you want to hear more from Elliot, sign up for his blog at econ70.com. Moving on to Lyon County in September, Lyon had 120 new listings entering the market and 70 closings. The median sales price in Lyon increased 3.2%, ending the month at $386,990. The month supply of inventory for Lyon is at 4 months. And finishing up with Washoe County, excluding the area of Incline Village, saw a decrease of 22.8% in new listings with 412 properties. Closings were down 13.6% from August, with 370 properties being recorded. The median sales price continues to remain between $570,000 and $575,000 for the fourth month in a row, ending at $572,000. Month supply of inventory took an upturn with 2.2 months of inventory. Overall, the median price for all of our areas is up to $525,000, including manufactured and stick-built construction types. Out of 602 properties that closed, 17.9% went above list price, showing that Northern Nevada is still seeing strong negotiations take place. And that wraps up this episode of To the Point. We will see you next month once again when we get to the point.